If you just got pre-approved for a VA loan, you're going to need to pay attention in this video because I'm going to share with you the trick for getting the most out of your pre-approval and possibly getting pre-approved even higher than you already are. But before I go into that, make sure you like, comment, and subscribe to my page because all I do is talk about VA loans all the time. I'm Justin Chermak, your VA loan advisor. So let's jump right into it. All right, so here's the secret sauce, right? If you just got pre-approved and let's say your pre-approval isn't as high as where you want it to be, you need to make sure that you ask your lender if they did a residual income calculation on your file. Now, those words might mean nothing to you, but they mean everything to me. Because believe it or not, there's actually two ways to do a VA loan. Number one is qualifying someone off debt to income ratios. And number two is qualifying someone off a residual income calculation. Now, I'm not going to bore you with the math because you'd lose your mind. And if you were in one of the dumber branches like the Marine Corps, bunch of crayon eaters, well, you're not going to be able to really follow along with this anyways. Maybe some of my Air Force guys can. But in a nutshell, residual income is far superior to debt to income calculations. Now, here's the thing. 90% of all mortgages out there are based off DTI, which is known as debt to income ratios. And with that comes certain limits that we can't go past. Now, with conventional loans, we definitely can't go past a 50 back-end debt to income ratio. And with FHA, it's typically around 56. But with VA, we can go as high as the mid to high 60s with a debt to income ratio. Now, you don't need to know what that number means. I won't bore you with it. In a nutshell, it's just your housing payment plus your liabilities factored against your income. And that ratio represents the maximum threshold we can go up to. But the greatest part about this is with VA loans, you can go higher than a conventional or an FHA loan. So yep, you guessed it, a VA loan is far superior because you can get a higher pre-approval. How much higher, you might ask? Well, significantly higher. Sometimes as much as $50,000 to $150,000 higher than a conventional or an FHA loan. So if you got a pre-approval for say $350,000, well, you're looking at $400,000 houses, make sure you got a pre-approval based off the residual income calculations, because that's the only way you're going to get more bang for your buck. Now me, I do residual income calculations with every single file that I come across. So every vet gets a residual income calc. So I've had tons of cases where a veteran comes to me and they got pre-approved for $500K from another lender, big box lender, and they come to me and I'm able to get them $600,000. But here's the thing, not everyone will qualify for a residual income calculation. The biggest determining factor that makes someone qualify for a residual income calculation or DTI calculation is credit. So if someone's credit is a little bit subpar or fair credit, they might not get a hit being able to use the residual income calculation. Now, there isn't an exact threshold, but typically if your credit score is say below the 640 to 650 mark, you might have a little bit more trouble getting that hit. And as a general rule of thumb, if you're 660 or above, you don't got anything to worry about. 700 plus, you definitely got zero to worry about. But here's the good news. I have ways to combat that. Now, if you come to me, I can also do credit manipulation to help you with your credit to get those scores back up. I use basically a what if simulator where I say, what if this, then that. If I pay off this account, then this. If I open a new card, then that. And it'll give me an exact time frame for how long I can expect your scores to go up and approximately how much points it will go up by. So in some cases, I've gotten veterans as high as 70 to 100 points in as short as 3 months. So with every problem, there's always a solution, and I got it for you. Now, in a nutshell, remember this. There's debt to income ratio qualifications and residual income qualifications as well. And residual income is right up here, and DTI is right down here. So the next time you're thinking about using your VA loan, make sure you have a residual income calculation done for your pre-approval. And if you need a second opinion or a new pre-approval, you can always come to me. I'll be more than happy to help you out. Again, I'm Justin Chermak, your VA loan advisor. Make sure you subscribe to this page because this is all I do is talk about VA loans all day, every day. Let's go. Motivator out.